This is Mira Business FM. It is time to talk gold. Our guest is limbering up, just, loosening the muscles, getting ready to run the 100 meters of gold this morning.
I wish.
Yeah, don't you just wish? We're on YouTube, we're on mirabusiness.fm, we're on Twitch, we're on Rumble, we're on Dailymotion, and you can contact us, whatsapp.mira.fm. Jeff Rhodes, the oracle that is Jeff Rhodes, is here.
Good morning, Tim.
Very nice to see you, Jeff. More and more, when I'm learning more and more about gold, you've not been here for a while. You've been in the UK for a week, but your predictions are remarkably accurate, I must tell you. It's quite amazing.
As I said off air, it's luck.
And I'm going to refute that. It's been one of those weeks again. We talked on Monday. You were in the UK. Was it just golf, or were you actually doing something?
Mainly
worky,
golf.
mainly golf. Okay.
No, certainly no
Good
work.
to know. Certainly not good. Okay, I just wanted to put that out there. But what we've seen is gold correcting over the last couple of weeks, nearly 4,400 on, it was October the 21st, 4,381 was the peak. Hovering around the 4.2 this week, really. We got to, 4,233.52 yesterday afternoon, I checked. The high was a little bit above that, 4,243 around
4,245.
4,245, okay.
Was the high. And a key chart point, interestingly, is at 4,250.
Yes, okay.
And when you look at the kind of fairly short-term chart, a break above 4,250 would indeed target the all-time high of 43.81. There's no doubt.
Yeah.
And the charts are bullish. The charts have turned bullish. There is an indicator, technical indicator, I do like to follow, and tends to be extremely accurate when there's going to be a breakout, either way, up or down. And on this occasion, it's called a MACD. As I said on the show before, it's not a burger. It's a moving average convergence and divergence indicator. It's a measure of momentum.
Right.
And it's a short-term moving average against a slightly longer-term moving average. They cross over. If the short-term goes above the long-term, it's a buy signal, and vice versa.
Okay.
And over I think it was Tuesday, we actually had that buy signal. And indeed, as we speak, gold is about 5% higher than we were on Monday morning. If you recollect, I did expect a higher price, and it still is not inconceivable that we won't see an all-time high today. It's possible. Really, there's a lot. The government's open again. There's a lot of conjecture about what the numbers are going to show, the economic data that's been delayed more than 40 days. And there's everyone's got their own ideas. But at the moment, the short-term momentum is up.
Well, this is the thing. It's 5% or so over the course of this week. You noted earlier this week, this wasn't a prediction, you wouldn't have been surprised if it got up towards the high there, as you've said there. So 42.45, really not bad. And all of this after the US government reopened. 43 days shut down. Closed.
It's amazing,
no
isn't it?
No business, no economic data, no nothing. It's crazy.
No air traffic control.
Yeah.
It's amazing, no travel.
It's mind-blowing how small a story it became.
You do realise why they found a solution. It's because we're coming up to Thanksgiving Day. And Thanksgiving Day, that period in the US, is a period of the most travel that they'll see all year, because everyone going home. You get this huge amount of internal traffic, air traffic within the United States, and it was inconceivable that we could have a Thanksgiving Day with government closed. So it's open. Problem is, we haven't seen any data for 43 days. What is that data going to say?
I noticed that on your report this morning. I read your reports. The last line was no economic data at all.
Yeah.
It was zero, nothing.
Zero.
What's it going to be like when the data starts to come back? What do you think?
Well, we had some private data last week, which was pretty negative. 150,000 reduction in employment. It was the Challenger report. I think it was the worst for 2 decades. And so if that is anywhere like an indicator, as we start to get the inflation data and the jobs data being published in the US, there is a concern that they will be poor. And if they are poor, it's a shoo-in for interest rates being cut in December. Now, before yesterday, there's a measure that's being taken in the market, and it's a percentage of what people think about rate cuts. Is it going to be a rate cut? Is there not? So on Tuesday, that was 70% certain there would be a rate cut of 25 basis points in December.
Yes.
As of yesterday, that fell to 50%.
Right.
Because a number of Fed officials have said, we can't really make a decision on interest rates because we haven't got the data. And others are saying, well, if the data does come through, it's going to be poor. So there really is. It's like a game of two halves, to be honest with you.
It's a proper catch-22.
It really is. So I think it's best to, whatever you're doing, just stay pat until the numbers work into the system and we have a better idea of where the US economy comes. I would have thought that measure of 50%, will there be a 25 basis points cut or not?
Right.
I think there will be.
Okay.
I do think there will be. And if there's some bad numbers, it wouldn't be the biggest shock to see a 50 basis points cut. You know, a shock to the system to make sure they head off, if you like, really bad news on jobs. And I think there could be some bad news. And if that's the case, gold goes up and we see a fresh all-time high.
That's another. I'm just making mental notes here and typing to myself. Jeff says maybe 50 basis points cut in December. Let me just ask you about something from one of your reports this week. You quoted Elliott Spivak, who's the head of global macro at Tasty Live. I just want to put the quote to you, see what you think now. A couple of days later, the idea that the US shutdown is ending was really more met, says Elliott, as lifting a level of uncertainty that gave markets permission to re-engage with what has been one of the main speculative narratives this year. Fair point.
Yeah.
The bias for the rest of the year is at this point favouring the upside still. At this point, the path of least resistance for gold is back to October's high. Then we might be heading higher thereafter. And I'm reading that thinking, that's not Elliott Spivak, that's Jeff Rhodes talking, you know? It seemed, it backs up everything you've been saying.
Yeah, like, as you know, Tim, I do have some assistance in the actual production of these reports.
Yes.
But the verbiage is all me.
Yeah.
You know, I've got really a good team behind me who are putting the numbers together every morning. And I simply have to swan in and see what I think.
Right.
And it does. It seems to me we had 2 or 3 weeks of probing the downside, and every time we had a look at 3,900, which was
we're still talking gold here, right? Yeah, we are. Okay, so I'm with you.
Yes, Tim, we're still talking gold.
I am with you.
And anyway, 3,900. It held on about 3 occasions, and that really has instated that number. 3,900 is a very good point of technical support. And this week, and so on Monday, if you recollect, gold should have gone down. You know, we said that.
That's what you were saying, yeah.
It is, the government is going back to work. Now gold should go down. It didn't do that. It did the other thing. And that, for me, was extremely bullish. Yeah. And it turned out to be. Whether we get to an all-time, it looks unlikely today, but I would have thought ahead of Thanksgiving, we would have had 4,400 plus. I would have said. Okay. I do say, in fact.
Okay, well, that's exactly what you're doing, indeed. Yeah. Okay. So I've got to keep track of all these things now. It's getting difficult. I'm ticking too many boxes. Another thing, Monday afternoon, you text me, and, you know, Monday, surprising day, I think it's fair to say. You texted to say, US economic reports will now come along like number 8 buses, which is a great old London saying. It's like policemen. They're getting younger. The buses come along when you don't need them.
Yeah.
Most US US economic reports could be less than favourable, which will mean lower interest rates. And as you've said there, 50 basis point rate cut would be appropriate.
Sorry, can I interrupt you there?
Go on.
No, I think it's going to be 25. But it
you could
wouldn't
see
surprise
that
me
yeah.
if we have some really bad numbers that we saw a shot in the arm with a 50 basis points cut.
Yeah, inflation falling, employment rate drifting, maybe a little bit higher as well.
Yeah. Look, I listen. If we have a very poor jobs number, for example, that is a red flag for the Fed. They watch employment very closely, and if there's really, really poor numbers, they will act. And because, of course, they do have Donald Trump watching over them, and President Trump really wants interest rates of 2%. He's on record for a long time now saying that's the right number. Yeah. And I don't dispute that, because if you have inflation of 3% and interest rates of 2%, that's kind of very much in line. And that would be your classic, economic, going back to my economics days, that would be classically what you want. You want a bit of inflation, just a bit more than the level of interest rates. So it all stays very much in line. And of course, 2% interest rates has a massive impact on the federal deficit. Yes. Because a big part of what they have to pay is interest. So it all makes sense. I think the argument for lower interest rates is very much in place, as I say, for the next 2 years.
One of the other things is and I've been thinking about this, and I'm interested in what you think about this, and we're back to the economic data here again. There's been nothing at all. And your report today, zero coming out. We're going to see government numbers emerging now that government workers are back, things are getting back to normal, the wheels are starting to turn. Your thoughts on that a few days on, in terms of numbers that, anything that we haven't talked about?
I think that I read an interesting piece that suggested they will prioritize the important data. So when they go back to work, in a week, probably you've got 3 or 4 important numbers. The rest of them are interesting, but not really kind of market changing. There's 3 or 4 of those, and obviously the CPI, Consumer Price Index, consumer inflation, producer inflation, the PPI, but also non-farm payrolls, the level of employment in the US, and also the level of unemployment. Yeah. So if we had a combination of benign inflation, because of course high inflation means it's kind of bullish for gold, but it really is. If we have benign inflation, there is no upside pressure on interest rates, more downside pressure. And if we have poor numbers coming on the non-farm payrolls, then the Fed will be forced to act. And as I say, I can see a combination of those 2 numbers being poor and needing that shot in the arm. It would be very unusual. 50 basis points for this federal chairman, for Jerome Powell, would be it would be very unusual. Yeah. But
it would be drastic, wouldn't it?
Well, it would. I think it would be a shot in the arm. Can you imagine? Equity markets would fly. Yeah, they would fly. Yeah, absolutely. Yeah. And gold goes with it, because one of the things about rising equity markets, your hedge against that turning round is gold. So that if it turns round, if you're buying a bit of gold when you buy your equities, you've got a natural hedge in case equities turn around. So if you do that, it used to be 90-10, but when you see the big banks now, they're talking 20% should be in gold. Tim, I've never heard that ever in my 50 years in the business, that the high street banks of JP Morgans and so on, the Citibanks, the NatWest, the big banks, for them to come along and say, actually put 20% of your assets into gold, it's never been heard of. So, and the amount of assets that are in gold compared to the rest of the economics is tiny.
Yeah.
It's really tiny, and so we've got room. We've got room for a massive change in the gold price, massive. Whether we get it or not, I'm not sure. If it's going to happen, it's going to happen. As I say, I keep saying it. We've got 2 years of fun in the sun under Donald.
Okay. Donald Trump is good for gold. You've
He
said
is
that
good
many
for gold.
times. No, I'm completely with you. We're back to what was the phrase in COVID? These are extraordinary times. But for gold, these are extraordinary times.
These extraordinary is ordinary for gold.
Yeah, quite right. It's becoming that for sure. You sent me a couple of things this week. Actually, I'm like, oh, there's Jeff because the phone dings. What was it that I wanted to ask you about? World Gold Council report, U.S. gold demand trends. This is Q3 2025. A couple of the highlights just quickly. U.S. gold demand rose 58% year on year.
Yep.
Q3. Robust investment inflows into gold-backed ETFs, particularly in September. We've talked
about
some detail about that. Offset weakness in other demand segments. North American ETF inflows, though, it's the figure that got me, $16 billion.
Yeah,
in
absolutely.
Q3. Every time I look at these things, this is 62% of global inflows.
Yeah.
It's just... it's hard to get your head around what's going on.
But it has been playing catch up because
Sure.
really in 2024 ETF demand was flat, and in the first 6 months of this year a little bit it was up a bit, but it was from like July onwards and particularly September onwards.
That's right.
There have been massive inflows, and so what you have a perfect storm of demand because we've had central banks over the last 4 or 5 years buying. We have this year retail buying, and this year we have the funds, the ETFs buying.
Yeah.
So all of the segments, official, private, and also retail, because I'm a big fan of retail because retail is sticky. When the man in the street is saving gold, and certainly here, there are some fantastic opportunities to save gold here. One particular bank that I was associated with, I'm not sure I can say the name, but has really built an excellent retail base of gold because of a focus on retail.
Okay.
And the great thing about retail, you spread your risk. And it's therefore very sticky. But when you've got central banks and when you've got funds and when you've got retail all buying, actually, over the longer term, gold can actually only go one way. Because we've spoken before about production, gold production. So this year, gold is up 60%.
Yes.
Okay?
Yep.
It is impossible for gold supply to actually be any more than say 5 or maximum 10% higher. It just is. It's really not flexible. There's no reaction from the producer side that can fill in that space. And so if you've got demand that's coming in and coming in and coming in, it's gold goes up. Depends by how much and when. They're the questions. Gold is going up over the next 2 years.
Well, yeah, and I wanted to ask you about forecasts a little bit because Bloomberg consensus forecasts currently point to prices rising through the first half of next year, so 2026, before easing towards the end of the year. So analysts are kind of digesting the move. New estimates are starting to trickle in. Revisions in October show an average. I quoted you loads of the different kind of estimates last week, but the average Q4 25 forecast, $4,000 an ounce. Full year 2026 targets have edged higher, and they range between, and exactly what you've said, the oracle that Jeff Rhodes is back, $4,500 to $5,000 an ounce.
Yeah.
Not unrealistic.
Look, I think it's a given.
Yeah.
To be honest with you,
Yeah.
I think now, once we're above 4,500, if we go above 4,500, it's not that far. It's really not that far to 5,000.
Yeah.
What is it? 10%?
Yeah.
Another 10%. We're up 60%, so it's not that much. Well, once you're at 5,000, then kind of pick a number.
You know that bit's getting clipped, don't you?
Yeah.
But no, but I see your point because
Yeah.
it's this thing of no, it's not going to happen, but it's within the realms of possibility. And if you it's that old saying, if you can see it, you can believe it, kind of thing.
Yeah.
Does that make sense?
Yeah, it does. No, absolutely, because for most people in the world, including me, to talk about $4,000 gold price in 2025 was off the scale. I couldn't see it.
Yeah.
As you know, I've said so many times, and I said at the start of the year, for me, 37.50 was my target.
Yes.
And once I got to 37.50, I became a bit uncomfortable because I was like, so what now? And fortunately, it was taken out of my hands because within a blink of an eye, it was already 4,000, then 4,400. You know, the rate at which gold rallied over the latter part of the summer is something that I will long remember, I have to say. And so when anyone says, is this possible in gold? Yeah, anything's possible. But Tim, we haven't spoken about silver, my favourite.
Well, do you know what? It's interesting this because I've got a number of questions to ask you, and my next question is this. I'm going to read you. I actually wrote this.
Yeah, okay.
I don't often spend as much time as this, but in terms of precious metals, it's been, and I'm using a quote that you used, a 4 out of 4 week.
Yeah.
Gold, obviously heading northwards. Silver got to 54.49.
It did.
This week on the 17th of October, 53.60. It's you've been predicting $60 since what, a year or so, couple of years. Yeah. Okay, going. I mean, gangbusters.
Yeah, I thought that fall back to 45, 46 was excellent. Actually, it gave people who had missed the boat the chance to get back in.
Right.
But they had to be quick. And this week, since we spoke on Monday, and I did say, you know, till we could see $60 this week.
You did.
Or a fresh all-time high. 2 days ago, we were within 10 cents of the all-time high.
Yeah.
So the all-time high, 17th of October, 54.49. This week, we've seen 54.39. So silver is nothing, it's a tease, so it's teasing me. So hopefully we will see a break higher today, and that sets us up for a rally towards $60 before Thanksgiving Day. Now, I'll put a date on it. So Thanksgiving Day is the last Thursday in the month, isn't it?
That's right. Yeah.
Yeah, so before the last Thursday of November, we could well see $60.
Okay, that's another prediction. I can't keep up with your predictions. They're coming too thick and fast now. Last two, let's stay on other precious metals. Obviously, platinum, palladium. Yeah. Your palladium target, $1,500 this week. Yeah. We got to 1,504.
1,504.
1,504. So my natural question to you is, 1,600 is next.
Yeah, it is.
Is it really?
It is. It is. I think the outlook for the industrial precious metals, for silver, platinum and palladium, is actually even better than gold, because gold is all about, if you like, financial safe haven, whereas the industrial precious metals are a mix of investment demand, jewelry demand, particularly silver and platinum, industrial demand and really speculative, because if gold is going up, silver's going up.
Sure.
Not necessarily the same with PGMs, but certainly when you look at the demand-supply structure of the platinum market, there is more platinum consumed than produced every year. This is why we have platinum in a backwardation. So the platinum lease rate, it's 30%. So you can't run a short and pay 30% per annum per day, every day. You can't. And so I'm very friendly on those. The good thing about platinum this year has been a big increase in investment and jewelry demand from China. Okay. Another thing that I didn't mention, or I may have mentioned this, going back to silver, the US has placed silver on its list of critical metals that they need to hold. So this is the government telling the world.
You haven't mentioned that, no.
I haven't
I
mentioned
don't remember that. No,
No, I don't. And I was just reviewing what happened, and I saw this, and it's a major step. This is wonder what. So apart from jewelry demand, industrial demand, you've got this demand from government. This is a critical metal. They need to stockpile. And we saw a few weeks ago a story that China has been stockpiling silver for a long time. And so this gives you the answer why suddenly silver went from being in abundance in London vaults to being, where's the silver gone? And Tim, honestly, I'd never, ever could see silver is what we call fork and tango. The difference between the spot price and the forward price is typically the same as, say, the dollar rate of interest, say 5%. Buy spot, sell forward, you make 5%, but then you have to fund it, so it comes to zero.
Right.
Okay?
Right.
Now, so silver was always like that until the last 2 months. And in the last 2 months, it's disappeared. And it actually didn't disappear. What happened, a lot of the silver that was sitting in London was realised it was pledged. And it's pledged against what? ETFs.
Okay.
So it all kind of comes together, but it does make it's a powerful, outlook for silver. And like $60 is the beginning; it's not the end.
You're saying a lot of stuff today, Jeff. I've forgotten most of it now. There's so much of it, but
fortunately, it's recorded. So
it is. Well,
unfortunately for me, it's recorded
just as well. But the thing again, I'm going to go back to the COVID thing. It is extraordinary times, no doubt about it.
Yeah,
and
it is,
and they're going to continue. I think
it is. Yeah, and it's good for me.
Yeah.
There's a need for my services.
Yeah, well, there's a need for your services here, whatever happens. Let me tell you. Jeff Rhodes, the oracle that is Jeff Rhodes, the CEO of Goldstrom Advisory. That's all the time we've got, unfortunately. But great to see you. See you on Monday.
Yeah, see you Monday.
Jeff Rhodes here on Mira Business FM.